Today, we are going to talk about the financial statement of Qantas. Our project is brought by Junan, Yiping Xiao, and Xinyun Zhang. Our presentation is divided into the following parts. Firstly is the company overview. Secondly is the Qantas group structure. Next is goodwill tax segment disclosure. Finally is accounting method. Let's look at the Qantas. Qantas was founded in 1920. The operation of Qantas are international and domestic air transportation service, freight service, quality tours, and associated support activities including flight training, catering, passenger, engineering, and maintenance. The CEO is Alan Joyce. His remuneration is $2,924,000. As we can see from the 2010 annual report, the consolidated profit after tax attributed to the shareholders of the parent entity is $116 million. KPMG Australia is the auditor of Qantas. The auditor's fee is about $7 million. And this number can break into 4 parts: audit service, audit-related service, taxation service, and other non-audit service.
About the subsidiary, Qantas have 141 subsidiaries as a whole. 108 of them are 100% owned by Qantas. 29 of them are owned by Qantas by 50% to 100%. Only 4 of them are less than 50%. 35 subsidiaries are foreign companies, which is about 1/4. Their location of incorporations are spread around mainly Asian Pacific areas, including New Zealand, Japan, Cayman Islands, Singapore, China, Hong Kong, Taiwan, Korea, Indonesia, Malaysia, and UK. There are 9 associates and 4 jointly ventures of Qantas. 65 million are earned by the 9th associate, 313 million are earned by the joint venture, and no joint control operations and assets can be found in the financial statement. This chart gives a clearly overview about the Qantas group structures. 9 associates, 4 joint ventures, 108 companies are 100% owned. 29 companies are 50 to 100% owned. 4 companies are less than 50%.
Goodwill was recorded as 219 million in 2010, and there's no impairment of goodwill occurred. And in order to test the goodwill impairment, the CGU method is used by the Qantas, and it is consisted by 3 components: Qantas Freight, Qantas Frequent Flyer. And they are all depend on Qantas fleet to generate their revenue. And the Qantas fleet assets are tested at the Qantas CGU level, including the cash flow and asset of this segment. And about the tax consolidated, and there is a statement in the notes to financial statements. It said that Qantas and its Australian wholly owned entities and partnerships are part of a tax consolidated group, so which means all members of the tax consolidated group are taxed as a single entity. And in terms of the segment disclosure based on operating segment, including Qantas, Jetstar's Freight, etc.
Qantas use different accounting methods in different situations. For control entity, Qantas recognize an entity as control entity when Qantas has power to govern its financial and operating policy. The control entity are included from the data that control commence until the control ceases. Any intragroup transaction and unrealized gain and loss are eliminated. Any NCI in control entity are shown separately. For associate and jointly controlled entity, Qantas recognizes it as long as Qantas has significant influence but not control power over its financial and operating policy. Investment in this entity are accounted for using the equity accounting method, carrying at the lower of the equity account amount and the recoverable amount. And any post-acquisition profit and loss is recognized in consolidated income statement, and post-acquisition movement in reserve are recognized in other comprehensive income. The cumulative post-acquisition movement are adjusted against the carrying value of the investment. Dividend reduce the carrying amount of the equity account investment. When loss exceeds its equity account carrying value of an associate or jointly controlled entity, the carrying amount is reduced to nil and recognition of further loss is discontinued. So in summary, basically all these accounting methods are compliant with WASB 127, and this item are counted in the parent entity as an investment account for using the equity method. So this is all our presentation. Thank you for your listening.